Happy New Year, folks, and welcome to 2024, a potentially extremely pivotal year for financial markets as well as investors worldwide. Yeah, folks, I have personally taken a pretty long break from YouTube for pretty much a single reason, which is the idea that markets really had nothing to show for themselves going into the end of last month. Pretty much the main thing we experienced is a rip-your-face-off rally where stocks climbed higher and higher as the short squeeze resulted from the insanely heavy selling we saw throughout the latter half of 2022 and 23. And based on what the Fed told us in their FOMC meeting back in December, the idea that interest rates are going to go even higher and that a recession is going to break the market once more has clearly been validated to be much more of a scare tactic than an upcoming reality. And the bull case that many people laid out at the start of last year, which is an inevitable rally in stocks because markets always look ahead instead of looking back, clearly turned out to be a news reality. Many people are still in awe of what happened last month, where the NASDAQ ended the year up more than 57%, with the S&P 500 having its best year since 1999. This has certainly eased concern from a lot of retail investors who were scared of buying stocks and investing in really any asset maybe other than real estate, because as we've also seen, Bitcoin has breached the $45,000 level for the first time since 2022. All this is begging the question, folks, as to what can we expect this year, given just how well we ended last year. Because as it turns out, this year is not going to be any regular year given the upcoming election, as well as the potential for interest rate cuts from the Fed and the potential realization of a higher unemployment rate. And well, that question, folks, is exactly what I'm going to try to address in this video. But as usual, before we get into it, guys, make sure to drop me a thumbs up and hit the subscribe button if you haven't already. As it turns out, folks, 2023 was a remarkable year for certain stocks more than others. After the bear market of 22, the NASDAQ essentially recouped all of its losses in a matter of just 12 months, shocking the eyes of even hedge funds who had been betting against the big names for a very long amount of time. And since the bottom of October, the market rallied more than it had ever done over the past 15 years in a span of a month and a half. And as I'm sure it has already been pointed out on social media, all this has occurred because of what the Fed told us in its December meeting about potential rate cuts in 2024. Anybody with a simple ideology around markets could have understood that this was inevitably coming, as PCE inflation has now fallen to 3% from a high of more than 7% in the middle of 2022, and the Fed is dealt with the cards of battling an upcoming election year and a very, very tight labor market. As a matter of fact, the Fed's number one goal this year should indeed be to support markets, increase investment spending, and reduce monetary tightening, which has screwed everybody but the upper 1% over the past 2 years. The problem that the government is facing is that right now the unemployment rate is actually very low, which means the opportunity for it to tick up is really high, and that doesn't play well in favor with the current administration's goals of re-election in 2024, or even Jerome Powell retaining his job over the next 24 months. And this, in my opinion, is exactly why the government has to clearly outline its path of where interest rates will realistically go, instead of simply trying to scare investors from spending in hopes of reducing the growth of inflation. Because as I'm sure many already have pointed out including myself, this inflation that we all experienced is simply a long-term transitory phase driven by a supply chain bottleneck during the pandemic instead of actual systemic issues with the financial or government system. And although interest rates have a significant effect on companies in the short term, they aren't something that affects them in the long term. And as clearly seen by the performance of the small caps, there are certainly certain types that are affected more than other types, which more so adds for the opportunity going into 2024. As a matter of fact, ending last year, the NASDAQ had its best year since 1999. And although this screams of a potential bear market rally, in fact, if you look at patterns of how these rallies occur, this isn't anywhere close to what that entails. In fact, I personally believe this is the start of an actual bull market instead of anything the bears say on social media. Because as you can see clearly by this chart, every single time we have had this kind of rally that has been followed by a negative return for the NASDAQ, markets have generally performed extremely well for the next 5 to 6 years, giving positive returns over the past 35 years. This can be seen coming out of the 2009 crash, as well as the 1990 bubble, where markets had a dip and then followed by a massive 60% gain, which then preceded going into the dot-com bubble of 1999. Whereas the rally we saw in 1999 itself occurred after another strong rally the year prior, which obviously contradicts what is happening right now in 2024. The idea that this is a bull market is further strengthened by the fact that the Russell 2000 had one of its best monthly returns on record with a 12.1% return for the month of December 2023. And as you can see, particularly for the S&P 500, 8 out of 10 times the market has indeed been higher, with an average return of more than 15% in a year later. As for what's going to go on with this quote-unquote recession that people have been talking about, well, if we actually enter one in 2024, which it doesn't seem like we are given the payroll data we just got last month, but if it does tend to happen, then markets will certainly have a significant decline ahead of them, with more than a potential 15% decline in a matter of 12 months after the first Fed rate cut. But if this doesn't happen, which has happened 8 out of 11 cases over the past almost 43 years, then markets actually have a significantly good return on most of those cases, nearing a 10% return over the next 12 months. And although I'm no economist, if you ask me, I think the chances of us going into a real recession are dwindling significantly, given just how fast claims have been falling and the unemployment rate has been staying steady despite financial conditions tightening and bankruptcies at an all-time high. Because clearly, a lot of these jobs are being lost not on Main Street, but much more on Wall Street. As a matter of fact, claims data has a much more reliable indication of where the market really is compared to JOLTS because of its significantly higher response time and bigger sample size, which certainly significantly supports the idea that we are entering a bull market and right now is not necessarily the time to get out. But as usual, folks, that is just my take on the situation. What do you guys expect from 2024, and what adjustments are you making to your portfolio, investment strategies, and general financial positioning going into the new year? As usual, folks, I hope you all have a fantastic and great new year, and thank you very much for watching.